G'day, I'm Joe Kaderavek. I'm the CEO of Cobalt Blue, and we're developing the Broken Hill Cobalt project. That's a top 5 ex-Africa integrated mine refinery supplying chemical cobalt to the EV and battery space. Thank you.
Joe, good to see you, and welcome back. Been far too long. You've obviously had your head down, being busy, doing a lot of things, and we're going to talk about some of those today. But just would like your help, if you don't mind, just give us a sense of what's going on out there in the marketplace with regards to cobalt price, and on the demand side generally. You know, what's the kind of mood of the nation? Because we still continue to see headlines about battery designs, excluding or trying to exclude cobalt and nickel. So what are you hearing? What do we need to know? Is the thesis still good?
Look, I think so. Firstly, when we enter into a discussion, either with investment or commercial partners, we're really talking about bringing our project into being. Our project's first production will be 2025. So really, we're talking about a 3-year forward view rather than trying to be focused on the next 6 or 12 months. What does the CME term curve tell us in cobalt? Effectively flat. We've got $38 metal now. It's effectively $38 metal to calendar 24, 25. But what I can tell you is the mood, looking at a 3-year, 4-year forward, is starting to get cognizant of the demand upswing coming. Now, just by way of putting a number on the table, and this is we typically ask partners what's their demand uplift in cobalt metal units from 2022 to 25, 26, obviously with a view to our production. I would say that conservatively it's a 1 to 3 pickup, but if I did a more scientific analysis, I might find that's 1 to 4, 1 to 5. So there's a material demand pickup on a 3-year view in the cobalt market. And I think we're in the right place to supply not only those metal units, but also the type of cobalt we represent, which is a non-African, ethical, high SG standard product.
Right. So a few things you said there was, I just want to understand it a little bit more. You say, the forecast for cobalt price, which we've discussed in the past, is fairly opaque. It's a small market, and there's no sort of terminal market for it in a way. So if it's flat, that suggests no growth. Yet the demand for non-Africa or non-DRC specific is good, you're saying. So I'm trying to work out why that isn't driving price, why that may affect your ability to capture increased price going forward, and what that does for negotiations for you.
Yeah, so the term curve I was talking about was actually the pricing curve. So if you like, it was what we're seeing in the next year or two is a steady price, which on one hand is cognizant of a lot of material coming in, which is DRC and particularly Indonesia as well. On the other hand, we're starting this pickup. So that hand-to-mouth trade-off looks like it'll last 1 or 2 years, and that's fine by us in the sense of the pricing is great. Beyond that 2-year point, we are seeing a genuine scarcity, and I say that because in discussions, there's a willingness to cut new deals, which there simply wasn't a willingness a few years ago in terms of length of offtake, prepayments, and those sorts of issues.
Okay, so the increased production coming out of DRC, Indonesia, wherever, at the moment will achieve that kind of, well, hopefully, maybe that consensus price, that flat price going forward. But for you, the bit I care about is, what's it look like going forward for you when you're negotiating prices, whether that be prepay now or decent long-term contracts in the future, and your ability to affect the margin gain that you'd want to going forward. So, because we've had a conversation, OEMs, they want ethical sourced cobalt, right? It's part of the design. It's been designed into the batteries, whether OEMs or battery manufacturers. So cobalt they need. There's a scarcity of it. So how do you capture it? How do you gain from that scenario?
Yeah, so probably a start point to the conversation is to say that today's spot price, and again, the term curve it reflects that spot price forward. Look, today's price is an excellent price. It's an outstanding price for us as a project. So we're talking about a $38, $39 metal price. The sulfate is trading with a 4 in front of it. We had in our PFS and in our updates in 2020, we had a $27 price for the sulfate. So today, when we're printing at 40, for our project, a $2.50 uplift in the price is a 28% post-tax NPV lift. So there's a massive leverage for us. So I can look you and investors in the eye and say, I'm quite happy with today's market. I don't need it to reflect a tighter increase in the balance and hence a price. So when we talk to partners, it's really about firstly volumes, specification, then the credentials of the cobalt, if I can use that expression. So origin of the cobalt, the ESG credentials. Pricing is a typically third or fourth parameter in that conversation. It's because pricing is simply not as important as those other parameters in the first instance. And even within pricing, it's less about price, but more about surety of price. So an OEM, for example, can tolerate a slightly higher offtake price as long as there's some surety around the volatility or trying to dampen that volatility, as opposed to trying to get cheap cobalt, which might flex up and down. And given the overall scale of the global market, you can flex it up and down quite readily in the next few years. So I'd say pricing is a lower demand right now to those other parameters, and I'd say within pricing, certainly surety is king.
Right. Okay. I can see the parallels with some of the other battery metals there. Fine. So you're comfortable with the pricing as it is. Expectation is presumably that it can only get better, right? You're not concerned at all, and sorry we keep talking about it, but it keeps coming up, which is cobalt being designed out of batteries. What you're hearing in your road trips to the US, Korea, and Europe is that not necessarily the case, or certainly not. It won't affect you.
This is going to shock you, Matt, but cobalt is being engineered out of batteries. There is a definite trend for a high nickel battery, and there is a certain demand there for a non-nickel, non-cobalt battery, the LFP. So we shouldn't avoid the conversation, just tackle it head on. LFP is a formulation that's in place for, I think, just on 50% of Chinese production, but globally represents about 15% of overall EV demand. There is some limited appetite, I believe, in the EU and US, and I think Tesla talked about incorporating it in the battery. But our forecast shows, given the limitations of the battery, it's going to continue to occupy a 15 to 20% style niche. So as the market grows, it'll grow with it, but not cannibalize additional demand. So in our mind, it's very simply a matter of, as cobalt is thrifted, so the unit penetration of cobalt in an EV battery goes down, times the actual unit growth rate still means it's a very healthy demand going forward.
Okay. Let's talk about what I just mentioned. You're now allowed to travel. You're now allowed to go and have those conversations with potential partners, strategic or otherwise, in the US, Korea, and EU. To what end? What are you trying to do with those conversations?
Well, firstly, we've in the last 8 weeks made up for 2 years of Zoom calls, and culturally different regions. The interpretation as an Australian sitting on a Zoom call can be quite wrong relative to a face-to-face. So it was very good to validate what we thought the market wanted. So with respect to the US trip we did, that was much part of a trade delegation. So we understood how the Australian and US governments are collaborating to debottleneck critical minerals to create supply chains to the US. Now, a lot's been said of that, particularly under the current administration. But effectively what the US want to do is underpin their own growth by sourcing from, if you like, preferred country status, those critical minerals. And we're very happy to be part of those discussions. In terms of the commercial discussions we had in Korea and the EU, then it was really validating those calls that we had during COVID. So the first question was ethical cobalt. We understand it'll command a premium, but how should we think about that as a seller? And I would say to you that ethical cobalt will become the benchmark price. Everything will be priced at a discount towards away from that. So if you can't, even today, if you can't prove origin, you'll have a discounted metal. I understand today in metal terms, even Russian material is starting to be priced at a discount just on the short-term influences. But certainly in the longer term, and if it's cobalt going to a consumer device, unless you've got the ESG and the origin credentials, you won't even get a seat at the table. And that'll be the premium price. Everything will be a discount below that. The other issue that we found articulated to us was because they're building an industry around these batteries, and now cobalt is built into that. So I guess some of that uncertainty of the last year or two with respect to substitution is going. They're now committing themselves to cobalt cathodes. And because of that, there's a necessity to source today for offtake in years 25, 26. So there's a real hockey stick, if you like, coming. And because of all that, it means non-traditional type sales arrangements are in play.
There's a lot of pressure being put on OEMs, funds. In fact, everyone in the food chain is having this pressure put on them. Some by state level government, some federal, and we're seeing that just change behaviour, change of narrative, change of discussion. And there's a danger if you don't kind of meet these standards, which are being, I guess it's all fairly nascent and new, but if you don't meet these standards, you're going to be ostracized or kind of left out. And what does that do for funding for companies like you? I guess it's got to be a benefit, but are you seeing sort of a change in the way that these interactions happen? Given, how you possibly worked in the past, what's the nature of the conversations now, and how much of it is around the ethical component, and what are the benefits or disadvantages depending on which side of the fence you sit?
Look, it's a really good illuminating style question. So if you like, there's two sets of standards we're aiming to achieve. One is the straight technical spec, which we can talk about. Yours is more the ethical side. Under the ethical banner, firstly, it's our belief that unless you are an independently accredited sustainable operation, you won't have an opportunity to place your cobalt in those consumer industries. So that's a third party accredited. For example, the Initiative for Responsible Mining Assurance, the IRMA initiative. That's a simple example of a third party accreditation. From a producer point of view, to get accredited might take you 12 months, might take you somewhere between 6 and 12 months. It's a large dollar cost because there's an independent series of consultants attached. And then the onus is on you not only to achieve it, but maintain that. So that's the minimum ticket to play in that ethical game. On top of that, you're expected to report on, water, CO2 emissions, etc. And increasingly, a top 5 question being asked today from the EV space is, what's your CO2 footprint? What are you doing about that footprint? It's not good enough to merely report it, but within the scope 1, 2, and 3 emissions, which are just basically different categories of emissions attached to the production and transport of your product, how are you reporting them, and ultimately how are you looking to mitigate those? We've even gone as far as to suggest targets and then with abatement offer a zero carbon cobalt. But there's certainly very strong appetite in the origin, in the sustainability factors around its production and indeed freight, and also CO2. And I think ultimately, to my earlier point, these will become minimum tickets in the game to supply to the consumer industries.
It's a very interesting one, isn't it? I think the kind of ESG components, which obviously clearly with the DRC elements, everyone's got a sort of heightened awareness of cobalt. But this carbon credit element now is being added to the ticket in that way. And I guess the concern for people, investors looking in is like, how much is this adding to the overall costs of doing business? I mean, I think we're morally obliged to, mining broadly is morally obliged to sort of up its game, but is this going to affect certain companies' ability to do business economically? I mean, where do you stand on that?
Look, we welcome it, but part of that is that we're in a very serendipitous position that we've got very strong credentials to start with. So, I mean, I guess if we started from a very poor baseline, we would struggle to achieve, we may struggle, but the reality is that most of our CO2, for example, comes from the grid, so-called scope 2 emissions. and we'll look to source renewables or a large percentage of renewables in the overall project. So we can eliminate the bulk of that. Now, the other issues of the Scope 1, the direct on-site footprints, we have a process by which sheer development avoids a lot of chemical and reagent consumption. And we did that because we wanted a simpler process and one that was effectively a little bit more energy intensive, albeit renewable, but less chemical intensive. So all of those factors have meant we're in a very strong position. But irrespective of views and irrespective of your own plans, I still come to the point, unless you can create standards which meet the future consumer industry's needs, you're just not going to be in that game. And it is what it is. So we're preparing for that. We welcome it, and we think we will be the go-to Australian ethical cobalt brand of the future. And not only from the Broken Hill project, but as we look around, we think we can bring other cobalt units to bear.
Well, yeah, I want to talk about that at the end, quite frankly. But look, I think the big news that the market is reacting to, and has kind of protected you from this kind of recent market, well, difficulty, should we say, for most public companies, not just mining or natural resources, but is the fact that you've got this demonstration plant in the process of building it. But so I want an update from you on where that's at and what the timing is around that. But can you talk about that in the context of some of the recent kind of federal government interactions, grants, etc.? Because the money side of things really important at this phase in terms of cost of money.
Yeah, we've been very fortunate this calendar year. So we started off in Q1 with a recognition by the government, and in the the Commonwealth government use a major project status as a terminology. As being awarded major project status effectively means that firstly, we're economically significant to the Commonwealth, and secondly, we fall under the critical mineral strategy. So there's two big pickups. Secondly, we were awarded a critical mineral accelerator initiative grant. That's quite the mouthful, but the key word is accelerator. So it was a grant that allowed us to top up on engineering and technical studies to de-risk the transition into production, but also accelerate by committing to those now. So partly it allowed us to invest in other technical risk areas to make sure that the FS, the definitive study we're producing, is as robust as it can be. But partly it accelerated some studies which traditionally would be undertaken after the delivery of a feasibility study. For example, connection studies. So connecting to the grid is typically something a mining company will do after delivery of those studies. We're doing them now so we can transition to EPC and construction as quickly as possible in order to be in production by 2025. So the government wants us to get to that position early. The key issue, however, from an international investor's perspective, is the support that's giving us and the recognition that's giving us federally. One of the top questions we get asked overseas is, what does the government think of your project, and are they active supporters? And being a recipient of both the status but also the grant is a very strong position to be in.
Right, and it's important what they think, the government thinks, but what's happening on a local level? Is this just people are looking forward to the jobs that it's going to create, or are you on some kind of scrutiny against? I guess it's coming back to the ESG component again, but we've seen so many projects shut down, closed down, or companies just were having to walk away because they're just not getting that right. So, what's the interaction at local level look like? One of
the adages in the mining game is that 90% of mining projects fail because of poor stakeholder engagement. And whether that number's true or not, it's a large amount of projects come off the rails because you don't engage with all the relevant stakeholders. A core portion of those stakeholders are local, be they state or physically local people in the Broken Hill area. We have, and I say this without any hesitation, a very strong reputation in the district. We've had numerous open days, communication days, where we're looking already at some of the more intractable issues with respect to our footprint, that in terms of who we hire. The fact is we are passionate about a residential workforce, about employing locals that are there already or bringing those skills in that need to be brought in. We're looking at issues such as housing. We're looking at issues such as all of those other soft issues and social infrastructure. So Hell, we haven't even delivered a feasibility study yet, but we're pre-thinking some of the traditional derailing issues that affect mines that don't do it well. So we take that license to operate really, really seriously, and we're comfortable that we're kicking goals to date, but need to keep kicking them. And one of the benchmarks I'll give you is that in the local Broken Hill area, we have over 400 shareholders on our register, which is 8 times, no, it's more, it's probably 10 times the next postcode anywhere in Australia. And that just shows you the support. Anyone who's putting skin in the game, that shows you the support behind the project.
Okay, well, let's get on to the demo plant. So where are you at the moment with that? Because I think, we're getting to really the heart of it here, the crux of it, which is you need to, one, start choosing EPC partners. You need to kind of conclude the kind of the testing and trialing by strategic partners, and you need to be kind of walking sort of firmly towards a point where you can get contracts in place, get firmer sense of the economics with whatever structured finance package that you want to put together. So, and that comes from the demo plant. So, can you give me an update on that? Thank
you for the question. I think that our investment in the demonstration plant, which is a $10 million investment, we're going to employ 35 locals in creating these outcomes. So there's a strong training and investment in the local community. But effectively, I'll split the gains this way. Firstly, there's a efficiency measure that we're looking at. In other words, we're verifying on a large scale the energy that we're being put in, the water consumption, the recovery of the cobalt, et cetera, et cetera. So all of those are technical underpinnings, I'll call them efficiency measures, that go into ultimately the economics of the project. The second area is effectiveness. Can we actually make the right product? Are we making the right spec? And today's spec, as we know, will change going forward. So the pilot plant from last year was tremendously useful to identify effectively 2 or 3 elements in those assays, which some partners, not all, but some partners said they'd like us to change. We'll now dispatch going forward the exact spec to those partners based on that feedback. That's a really strong position to be in. But as we know, the game will evolve, so will those specs. So today's spec might be a 5 parts per million or even less iron content in the cobalt sulfate. That may become 4, 3, 2, 1 going forward, and we're ready for that. And that then underpins the third area, which is that commercial investment area. Are we making the right product in the right volumes, and do we have the right commercial approach? And what this post-COVID period has done in particular is validate the assumptions that we're going to go to market to sell product and or sell equity in the plant. And I've got to say, with a big smile on my face, it's going very well.
Okay. But it's gone well at kind of the pre-demo plant phase. What's the expectation of some of these strategic partners in terms of the amount of product that and different types of product that you're going to be able to send them? In terms of timing, volume, how long their testing time is, and how quickly after you've done that do you expect to be able to kind of conclude conversations, or at least pick the people that you want to work with? Because I guess it's going to be a seller's market, right?
Well, yes, it is. It is certainly the power is, I think, on our side, particularly when we're dealing with the ethical nature of the product. Look, I think we've effectively started a very exciting period for the business in the next 6 months. We will be producing demonstration scale, so that's a 24/7 scale of operation within the next 4 weeks. We'll have an announcement out in the 3rd week of June with respect to mining and initial concentration operations. The learning I touched on earlier for our people, the learning about our equipment, all those efficiency measures. Importantly, we'll be dispatching 100 kilogram samples of MHP and lots of 10 kilogram samples of cobalt sulfate. So one sample there is more than the entire production of our pilot. And that allows us then to do sample pre-qualification. So in other words, become a certified supplier to the chain. At this stage, we're looking at somewhere between 10 and 15 partners who want to get to that level with us. in terms of the pre-qualification. And at the same time, we've blocked out a 6-week period in August, effectively for due diligence. So we're going to not shut the plant. We're going to run the plant, but effectively stop other investors coming in and allow exclusive access, typically for 24 or 48 hours, for particular companies to come in. We've set up Broken Hill with a conference room and all the internet and other connectivity, and they'll do their due diligence. We expect, let's say, double-digit level of interest with that. They're automotives, they're battery makers, they're trading houses. So it's the full plethora of those we've been in touch with. So I think by natural consequence of the work we've done, that Q3 is going to be very, very exciting. At the end of that, to answer your question, once they've done the due diligence, there's a sense of achievement with respect to the process works on that scale and that consistency. Then we'll our aim is to turn non-binding into binding outcomes, and we're certainly looking to do that in Q4.
That's interesting. It's kind of interesting when you talk about competitive tension. It's interesting that we are not having a discussion about technology, your ability to do it, your ability to deliver to these guys. I think the expectation is now, having been through the process as you have, and their expectation is that you can definitely deliver that. It's really a question of refining the bespoke product per OEM, because you're tweaking it to their specifications, and it's a question of how much can you do that, and what is the construction of that contract. In terms of your, I guess, desire to kind of mitigate risk, because would you go all in on one strategic partner? I guess they would love you to, but does that work in your favor or against you? It's
an interesting question, because our thinking has been, 2 years ago was the traditional risk diversification. We need so many partners, we can't deal with one or two. But the reality, when you're dealing with credit-worthy partners of the scale we are, and by way of example, and as a reminder, we have LG as a shareholder, or today known as LXI, credit-worthy partners, if you like, AA, AAA corporate credits. To deal with one or two is more than sufficient from a risk diversification and creditworthiness offtake for a bank to lend to. So because we're dealing at that end of town, we can afford to contemplate one or two. So it's not about us so much, and this is something I've learned in the last 6 months. It's not about us mitigating our risk. It's the counterparty then looking at us saying, well, they're a small company. They've got a process they're still proving. I don't really want to take 100%. Maybe they do. So from that point of view, I naturally lend to hey, we need two partners, potentially three type outcome. So not from our demands, but more from the counterparty.
Interesting. Yeah, I guess it's easy to navel gaze and think of yourself. But the risk works both ways. So, Joe, that's a great update and sort of what's happened the last 6 months and your expectation of what's going to happen in the next 6 months. Are there any kind of red flags for you out there in the market that you need to just, protect yourself against? Or do you feel that, again, seller's market and all of that, you feel it's going to be kind of plain sailing from here on in? I mean, where are the bumps along the road?
Yeah, look, I never take anything for granted. We've worked very hard. I've been in this business for 6 years. The bulk of the technical and corporate team, we've had virtually no turnover in that period. So all of these guys and girls are invested. They all want to make this work, and they all want to look on their CV and say, hell, I brought in a cobalt mine. So we don't take anything for granted. Look, if I had to say the red flags are largely those out of our control. We've got strategies in place to balance the risks that are within control. The stuff that's out of control is really the macro. What will investor sentiment be? Can we continue to run and raise money in the future when we want to? Is there a negative sentiment, for example, in EV take up because markets are depressed, or there's a recession or recessionary type outcomes? I can't control the macro. I don't pretend to. If that happens, it happens. But I think we're in a very robust position, and certainly even if it happened, as soon as the macro was to get back on a neutral scale, I think we're in a very strong position.
Okay. Well, like you say, no one knows what the future holds, and what the economy, state of the economies around the world will do for people's spending behaviour. But let's wait and see what happens on that. I want to talk to you. There's one last thing, which is, and you referenced it earlier, which is some of the other potential projects in country. This is obviously, you got to focus on number one, which is get the demo plant up and running and do the things that we've just talked about. But there's some other potential revenue flows for you through kind of remediation type exercise elsewhere in Australia. I mean, we've talked about it in the past. So are you paying much attention to that, or is it 100%?
Paying a lot of attention to it, not trumpeting it purely because the waste streams, as we call it, cobalt waste streams on the rehabilitation side, typically has a commercial counterparty. Not always. Sometimes there's abandoned mines that we're dealing with. But we are in active test work. We are in active discussions. There's some very exciting opportunities, which unfortunately I can only just hint at because of their commercial sensitivity. But I think the ability for us to commercialise cobalt that's currently sitting there in waste, in mining waste, I'll be very specific, not so much black mass, because Australia has very little black mass to date, but in mining waste is very strong. I think the alignment of that industry with recycling limits and standards as proposed by, for example, the EU Parliament, which is proposing a minimum recycling limit for cobalt in EV batteries by 2030, and that limit's 12%. I think, therefore, there's a material market for that. Mm-hmm. But look, Matthew, I'd have to say we're probably 3 months or more from me being allowed to publicly say this is what we want to do. But the quantum of units available is potentially as high as the quantum of units that are already out of the Broken Hill project. So this is a game changer. The other thing I'll put to you in terms of other projects is we are looking, as you know, to convert MHP to sulfate, to cobalt sulfate as part of our project, but not necessarily do that final step at Broken Hill District, and are looking to place that by over-investing in a sulfate refinery in a port scenario, and particularly in areas where there are other cobalt units, for example, Queensland or WA. We think we can scavenge up new cobalt units and increase our 3,500 tonnes to a much greater number. So I think investors can look forward to an update from the company where we articulate the strategy whereby we create the first Australian cobalt sulfate refinery, potential to integrate into a downstream precursor area, but certainly look to bring to the market more cobalt than just from the Broken Hill project. That's a very exciting project for us, but it's one we'll have to make good with deeds in the next 6 months, and I look forward to updating you. Okay, some nice potential blue sky coming down the line in terms of that growth story. Well, look, Joe, I appreciate you coming on the show, giving us an update. I know you're a busy boy at the moment, and stay in touch. Let us know how things get on, okay? Matt, it's always a pleasure. Thank you.